Eric Mwatha with Mwatha.com for the weekend of February 21st and February 22nd, 2015. Let's take a look at how markets closed on Friday in the US. We see that the Dow had a nice move up 0.86. Nasdaq was also up 0.63. S&P 500 was up 0.61. Gold was down slightly. Crude oil was up, or actually down about 2%. And we see that the VIX was down about 6.5%. For the week, the S&P 500 was up 0.63%. We see that for the week, the Dow was up 0.67. And we can see that for the week, the Nasdaq was up 1.27%. Now, if we go back to those weekly charts, before we get into the meat of the analysis, we can see that we broke out to new weekly closing highs. But we see that there's a simple line we can draw connecting the highs on the S&P 500. As an example, you can see that that is exactly where the market closed on Friday. We take a look also at the Dow on the weekly. It's not as same as the S&P 500, but if you take a look at the Nasdaq, you can see that we have a similar type line connecting the highs on the weekly RSI. So we did end the week with the market coming back there. Of course, depending on how the next couple of weeks go, if the market can move above that line and trade above that blue line, that's a bullish market. On the other hand, if the market is showing or does show resistance back below that blue line, then we are going to be due for a pullback. So I think that's the simplest analysis, or a nice conclusion of what the weekend analysis is going to be about. The fact that the weekly charts are back to that potential for resistance, and all the market needs to do is trade above that line for the bull market to continue trading to new highs. And all we need for the market to do, if you're a bear, is for the market to show resistance right there on the weekly RSI time frame and have the RSI point down. So we're either going to get a continuation of this move, or we're going to get resistance on that RSI line for a pullback. So very simple analysis. So week to week, this is where the market is going to have to decide which way it wants to go. So if we go to the charts, we see that the Nasdaq is now on week number 2 of a very nice and strong breakout above the prior weekly closing high of 48.06, as the Nasdaq gets ever close to that 5,000 level. And we can see that this move to new highs began when the market came back to the lows line on the weekly there, and we saw 2 attempts to break below that line, ended up being that this was a double bottom formation on the weekly RSI. And so the market since then, which was somewhere around here, has had a nice couple of weeks to the upside. And again, as mentioned, now the RSI is going to determine whether we are going to break out above that. And in essence, we are trading between those two lines: top side line, which could show resistance, and the bottom side line, which has been support. So eventually we are either going to break out of that line, or we are going to break down of this wedge. Now if we take a look at the MACDs, we can see that on the weekly time frame, both MACDs continue looking very good, because now we have a crossover of the MACD while the Nasdaq is trading above zero. And of course, as we know, crossovers above zero tend to be more decisive of the next move. And here we are seeing the potential of a crossover when the market has the MACD above zero. Indication there is that with all things held constant, the market should be okay. Of course, we're going to have to keep a very close eye to this line, the top side of the weekly RSI. Let's take a look at the Nasdaq Daily. And the Nasdaq Daily did see that accelerated move on Friday. So that move, which was a strong move after a down beginning to the session, was because the daily RSI did move above 69.10. And as the market jumped above that threshold, we saw a spike in momentum. So as long as the market is trading above 69.10, we should expect this move to continue, even with slight pullbacks. Now, if this threshold becomes resistance, maybe we might have to revisit and see what that means. For now, it looks like the market could be looking strong with that RSI moving above 69.1. Now there's an argument that can be made that this is a potential area for resistance. If you take the high there on the RSI and this high, draw a simple straight line, you can see that the market has come back to that line. So obviously, if this stands into resistance on a day-to-day basis, that could predict that we are due for a pullback, and also that the market is due for a pullback. So here the daily is also showing the same thing as the weekly, that it is a level where we can sensibly expect this to be resistance. Of course, if the market can climb above that, that's very bullish. Otherwise, if it's resistance, expect a day-to-day pullback. The Nasdaq on a hourly chart, we can see that the RSI is still above 69.1, and as long as that is the case on the hourly, expect the market to be strong. Now the pullback during the session on Friday and that snapback recovery was when the market came back to this line here. As you can see, the market held above that line, and ever since we had that breakout above the line here, the green level, the market went to new highs on the Nasdaq, and we came back and tested that line here at the lows of the day on Friday, and then snapped back after we held support. So that looks good. You can see that the MACDs are also both above zero on the hourly time frame, and as long as the MACDs are crossing over above zero and holding above that zero line, momentum continues to be strong to the upside. Take a look at the 30-minute chart for the Nasdaq, and we can also see that this is actually a good chart that shows what happened intraday on Friday. At the lows of the day, RSI just closed below 50, and then in the next half hour of trade, the market moved back above 50. So we have that sharp move below 50 on the 30-minute time frame, which had the market down about 110 points on the Dow, and then held around the 50 only to move back above the 50 level, so here, for another sharp move. So this V-type formation is because the market came to the 50 and back above it, and that explains the move, in my opinion, why the market had such a volatile session on Friday. We also see that at the lows of the day on the RSI here, it also happens to be connecting the line, connecting the most recent lows on the 30-minute chart. So if you take RSI of 14, just draw a simple straight line at the lows of the day, the market held that line and went on to recover off the lows and have a nice session to the upside. Also, the move was very strong because on the 30-minute chart, the Nasdaq managed to move its 30-minute chart above 69.10. So lots of things pointing to a good market. You can also see that both MACDs are also above zero, and also another recent crossover, MACD also held at the zero line, which might explain why we had a strong recovery on Friday. Take a look at the Dow 30-minute. Dow not as strong, but we can see here for the week the Dow is now closing at fresh or brand new all-time weekly closing highs above 18,053.71. So as long as the market is holding above that prior weekly closing high, then this could indicate even higher prices over time. Now if we take a look at the daily, in fact, let me go back to that weekly chart for the Dow. Remember, the Dow held the 50 level. We discussed that about 2-3 weeks ago. Because the 50 held, we knew that the market had a very high probability of making new highs just because the 50 held. You can see that every time we've been moving below 50 and above 50 with uniform activity, stock market has been going to new highs. We held even here at 50 level on the weekly RSI, which was there, market would go on to record new highs again. We held the 50 level here, which this lows here, and the market again would go on to record new highs. So this has been going on for quite a while, that the market has been bouncing on the 50 level there, and every time has been going to fresh highs. So this new close is not altogether a surprise. So we go to the daily for the Dow. and you can see that the Dow is making a very good attempt of breaking out above this previous line of resistance. And prior to Friday's move, this RSI resistance had given us the high. And so we are looking at the market here closing above the previous daily closing high of 18,053.71. As long as the market is holding above that threshold and above that line, this is a strong market that needs to be respected with potential for upside. Of course, we are back at a very critical level. If the market can hold and sustain momentum above this declining RSI line, then that's very bullish. On the other hand, if the market shows resistance, because that's where it closed on Friday, if the market shows resistance there, one can expect that this is a logical place where we can see some short-term pullback. So above 1853.71, the Dow looks good, and also if it can stay above the line of resistance, that's good. If both of them turn into resistance, if the price moves back below 1853, if RSI shows resistance here, then we can expect a pullback in the market. Now, if you take a look at the Dow from an hourly standpoint, we can see that the RSI, during the lows of Friday's session, RSI came to this line of support, bang on, and held. As it moved below 50 on an hourly time frame, the Dow had a big drop. As it jumped back above 50 on the hourly time frame, the Dow had another sharp move to the upside. On this one, I'm using RSI setting of 26, but I'm pretty sure that's the same thing that happened on the default RSI setting of 14. And in fact, what I've done is now this is a RSI, and now I'm showing you the RSI setting of 14. Couple of things. If you take the lows, draw a simple straight line, you can see that at the lows of the day on Friday, the market came back to this line, which has been the line that connects the most recent RSI lows on the hourly. And you can see there was a drop below 50, which was why the market was down significantly during the day. And then we jumped back above 50. In doing so, we had a snapback move. So it's that move and a dance around the 50 level that led to that sharp drop in the beginning of the day and then a strong close by the end of the session. So just trying to show you here that you can also see the same type analysis if you use 14 or you use whatever RSI setting. Sometimes I use 26, but just want to show you that you can still use your 14 to come up with the same analysis. Now back to my charts, and we can see here that the Dow has come back to the top side of the hourly resistance line. So remember, we had support on the way down, and now we are back to what could be resistance on the way up. So if the market shows resistance on that top side of the RSI, then we are due for a pullback. But if the market can jump above that line, that's going to be very bullish. We take a look at the 30-minute chart for the Dow, and you can see very easily that a simple straight line on the 30-minute chart gives you the lows. And once the market hit that during the session on Friday, then the rebound began. We see that we are back to the top side of that line. So if the market does not move above that line, then this is going to be a resistance area. This is also a level where the Dow has been seeing short-term pullbacks. You can see below that blue line was here, and then every time the market has been coming here and showing resistance, we've seen a short-term pullback on a 30-minute chart. Even here, short-term pullback, recently here, short-term pullback, and so we are back here. So those two lines, if the market is going to do well, it needs to be above that line. Otherwise, if this is resistance, that could indicate short-term pullback, which could also mean that the price is due for a short-term pullback. So if you take a look at the 30-minute, in conclusion here, above that line, the market is bullish. If it shows resistance, then we can expect a pullback. Let's take a look at the S&P 500 weekly. And we closed above the prior weekly closing highs on the second consecutive week. So back-to-back weekly closes above 2088.77. So this breakout still looks good. As long as the market is holding above that prior weekly closing high, this is a breakaway market that could record and easily record higher prices. So you really have to be careful here with the potential for an upside after a market has broken out. Now we look at the RSI. I just want to show you that this is a level where one can expect resistance because of that RSI line. If the market can't move above that line as discussed earlier, we can expect a pullback. If the market can move above that topside RSI line, then maybe there's more upside. So that's what we're going to be looking at as we go into the new week. On the S&P 500 daily, we can see that we are above the prior daily closing high, of course, of 2090.57. As long as the market is holding above that, that's a respectable market. We can expect higher prices. Keep in mind, if we go back a couple of days, we had talked about this wedge, you remember, and we had discussed the idea that if the market moves outside of that wedge, either with a bearish break or a bullish breakout, expect a move in the direction of the break. So we got the move here above the wedge, and since then we've seen the market really start moving with strength to the upside. As long as that's the case, then this is a good market. Of course, I can see some subtle signs of resistance here. If the market stays underneath this line here, maybe there's some type of resistance, but I won't put too much weight for now because the recent move above the prior daily closing high is good enough, and also the recent move above the wedge is good enough for now. So the bulls are in control of the market until we can see evidence of some other type of market breakdown. Take a look at the S&P 500 at the lows for the day. The market held this line at the lows, and once the market held there, then we had the bounce. So as long as the S&P 500 is holding above prior daily closing highs, is holding above the prior hourly closing highs there, the market to me looks good. Of course, I can see that this is a level on the RSI where it's been showing some type of resistance, and like the Dow, if it can't move above this RSI topside, maybe there's a pullback. But again, as long as the price is doing well and we moved above and outside of that wedge on the daily, I think this market looks good. We have to wait for evidence of a crack in the market, otherwise we would be really stretching it if we are trying to say that the market is bearish. So the market does look strong. Quick look at the Canadian market on the weekly time frame. We can see we had a slight down week, about 0.61% down. We are looking at confirming resistance on this RSI line, and to put it very simply, if this is resistance, we can expect a pullback, just like we had a pullback after this resistance here on the RSI, which was this point. If the Canadian market is to do well, it needs to be above that line. Otherwise, right now, if it continues showing resistance, then we should expect a pullback, and it is only after it can climb above that line of resistance that we can say that the market is due to catch up with the US markets by recording new highs. So that line of resistance is well defined. Below that line, expect a pullback. Above that line, expect the market to continue moving higher. Let's take a look at Apple here, and we see that on the weekly, this is now multi-week breakout above the prior weekly closing high there. Once the market broke out above 119, 118 level, it's been trading well. On the weekly, the RSI is above 69.1. That's a sign of strength. We take a look at the monthly. We also see that the RSI has mainly stayed above 69.1 since this move somewhere here mid-summer of last year. And since then, we can see that there's been this acceleration of a move higher. RSI continues looking good on the monthly, and as long as it's holding above 69.1, then we can expect this to be a nice and strong, steady market. We take a look at the daily. We can see that the RSI is also trading above 69.1, yet another sign of strength. And also we can see that the same thing can be said about the hourly. And as long as the hourly is holding above 69.1, the daily and the monthly, all these time frames are above 69.1, Apple looks good as a stock, and it's really hard to see a reason why the stock could pull back. Yes, it could pull back, but the monthly looks too strong. The weekly looks too strong, so we have to respect the potential for even increased prices to the upside. Take a look at the markets on a monthly. We can see that the Dow is above the prior monthly closing high, which is very bullish. We see that the monthly RSI is above 69.10. Again, a sign of strength. We take a look at the S&P 500 on a monthly time frame. We can see that it is also above the prior monthly closing high. So this is a fresh monthly breakout. And as long as that's the case, as long as the RSI continues holding above 69.10, something it has done for the most part since February, March of 2013, which was here, this market should continue recording fresh highs on a monthly time frame. Take a look at the Nasdaq. And the Nasdaq is above the prior monthly closing high also, obviously. And we can see that the Nasdaq continues to hold above 69.10, and it's been staying above 69.10 despite all pullbacks ever since it moved above here, which was summer of 2013. You can see the RSI has stayed above 69.10, and as long as it is above that RSI threshold on the monthly, boy, you can expect higher prices. For those of you who are subscribers, I'm going to have part 2 of this video analysis sent to you guys, I think either sometime Saturday or maybe for sure by Sunday. So on Sunday at some point, I'm going to be sending you guys part 2 of this video analysis. Otherwise, that's it for me. As long as the markets are holding above 69.10 on the monthly, expect your markets to be making fresh highs week to week, month to month. And one more note is, if you take a look at the long-term monthly view for the Nasdaq, you can see that we are above the prior all-time monthly closing high going back to 2000. And as long as the market is holding above that prior monthly closing high, honestly, this is a very strong market, and the potential for the upside here is actually scary. So keep that in mind. Eric Mwade, I will be sending you part 2 of this week's market analysis when it's ready. Good luck, peace, and blessings. I am out. Woo!